Good morning everyone. Welcome to the official YouTube channel of Officers Adda 24/7. My name is Amanjot and this is our next class related to this is our 26th class related to principle and practices of banking, in which we are practicing certain MCQs or questions related to your PPP subject. Okay, so before starting the session, let me know, am I audible to all of you and the PPT is also visible? Good morning Gitanjali, good morning Murli, good morning Prajakta. How are you all? So let me know, are we good to go? Audio, video, both are okay? Good morning Uma. So let's start this session. Everything is okay? So those candidates who are new to the channel, do subscribe the channel and press the bell icon so that you will get all the notification related to the upcoming sessions on Officers Adda 24/7. Okay, and next, if you have not downloaded the Adda 24/7 application, do download the application now. Next, there is a certain batch which is dedicated for the June JAIIB exam, which is English medium batch. There are 2 English medium batch on the Adda 24/7 store, where you will find one batch with the Macmillan books and another batch without the Macmillan books. So in this particular batch, you will get 3 Macmillan books of all of your 3 subjects, and you will get the mock test, e-books and recorded sessions of the live classes. Clear? So if you want a dedicated platform where you will find all the topics or all the study material without wasting time and in R&D, in research and development, so what you can do, you can simply join this particular batch after visiting Adda 24/7 application. Okay, and while visiting the application, you have to go to the JAIIB CAIIB section, where you will find all the products related to the JAIIB CAIIB exam and also for the bank promotion exams. Clear? And you have to use a certain code for the 78% discount, that is Y496. Now let's start with the first question. The first question is asking which of among the following is the main function of RBI. So which of the following is the main function of Reserve Bank of India? First option is saying it issues and exchanges or destroy the currency not fit in the circulation. Second, saying it manages the foreign exchange reserves of the India. Third is saying it performs as a lender of last resort for commercial banks. Fourth is saying it works as a regulator and supervisor of financial system. So which of the following is or are the main functions of Reserve Bank of India? A, B, C or D? What will be the answer of the first question? Gagan is saying D. Suchi saying D. Gitanjali saying D. Okay. What about rest? Vinay is also saying D. Uma is also saying D. Murali is saying C. Okay. Nisha saying D. So maximum are going with the D option. So right option is your D option. All are the main functions of Reserve Bank of India. All these functions are performed by Reserve Bank of India. Right answer will be D option. So whenever we are talking about RBI, RBI is the central bank of our country. RBI is the apex bank of our country, which exchanges or destroy or issue the currencies which are not fit in the circulation. Second, it manages the foreign exchange reserves. Whatever foreign currency we are taking into India, whatever foreign currency coming into India, all the foreign currency will be managed by Reserve Bank of India. RBI is known as lender of last resort for all the commercial bank. It means whenever commercial bank required a financial help, RBI will always provide them the loans. Okay, so that's why RBI is the lender of last resort for all commercial banks. After that, it works as a regulator and supervisor of financial system. That is also true. RBI regulates and supervises the financial system with the help of your money market, with the help of your monetary policy, with the help of your negotiable instrument act. So simply these are the certain main functions of Reserve Bank of India. So right answer will be D, all of the above. Okay. Now next is Second question, acha, if we are talking about the currency which is not fit in the circulation, which type of currency is not fit for the circulation? And what are the soiled notes? And what are mutilated notes? What are soil notes and mutilated notes? What is the meaning of the currency which is not fit for the circulation in the country? Which type of currency is not fit for circulation in country? Let me know. What is soil note? What is mutilated note? What is the meaning of the currency which is not circulation, which is not fit for the circulation in the country? Torn notes, okay, correct, Uma. What about rest? See, whenever we are talking about the currency which is not fit for the circulation in the country, it means the type of currency which has torn into two or more pieces, the type of currency which is very dirty, the type of currency which is not understandable, or we can say the type of currency which is not usable by the persons in the country, that currency is known as that currency not fit for the circulation. Let's say if we are talking about the soiled notes are the types of note which are very dirty and which include certain colors or have been very dirty. And second, if we are talking about the mutilated notes are the notes which are torn into two or more pieces. Those are mutilated note, but it are added by the certain external use or external force so that you can use that particular currency in the country. So these type of notes are known as soiled notes and mutilated notes. Soil notes are also the notes which are toned, but when we are talking about mutilated notes, we have torn into multiple parts and then we have submitted the different part of the notes. It means the half part of the note is for the another note and half part is for the another note. These types of mutilated notes are the torn notes or not usable or not fit for the circulation in the country. Okay, now next, cash reserve ratio is the deposit to be maintained by banks with Reserve Bank of India is a type of voluntary deposit, is a type of mandatory deposit, or a type of on the discretion of the bank, or none of the above. What will be the answer of the second question? When we are talking about cash reserve ratio is one of the reserve ratio which is CRR. Now CRR will be maintained by all scheduled commercial banks with the Reserve Bank of India in form of cash. These are the reserves. Cash reserve ratio is a certain reserve which is maintained by all scheduled commercial banks with the Reserve Bank of India in form of cash as a percentage of their NDTL. Okay, as a percentage of their NDTL. So all the scheduled commercial banks has to maintain a certain reserve as a percentage of their NDTL with the Reserve Bank of India in form of cash. Now there is no minimum and no maximum limit on CRR. It means it can be changed between 0 to 100%. There is no restriction. Now it is mentioned under the RBI Act 1934 section 42(1). Okay, now when we are talking about the cash reserve ratio, no banks can earn profit. No banks can earn profit on CRR. And why this is happening? Because no interest will be paid by Reserve Bank of India on CRR to commercial bank. So this is the conditions of CRR, or we can say cash reserve ratio, and everyone is going with the B option. That is correct. Cash reserve ratio is the deposit which is maintained by the commercial banks with Reserve Bank of India, and it is a mandatory deposit which they have to maintain. And if a bank is unable to maintain this reserve, or if a bank is not maintaining this reserve with the RBI, then RBI will implement certain penalty on a commercial bank. So this is a mandatory reserve which a bank has to maintain with Reserve Bank of India in form of cash. Similarly, SLR is also a mandatory deposit which all the scheduled commercial bank have to maintain with themselves in form of cash, gold and security. Okay. No minimum and maximum limit means RBI can change CRR percentage from 0 to 100%. Like what is current CRR right now? For example, CRR is 4%. It can be 0%, it can be 100%. So when RBI is deciding the percentage of NDTL for maintaining CRR by the commercial bank, that limit has no restrictions of minimum and maximum. Earlier it used to be 3 to 15% till the year 2006. But in 2006, RBI has removed both the limit minimum and maximum. Now CRR can be 0% or 100%. Okay. And right now the CRR is 4%. Clear, Hema? The percentage of NDTL which is decided by RBI in every bi-monthly monetary policy review, it has no minimum and no maximum limit. So right answer will be your B, that is mandatory. Next. Third is dash provide clearinghouse facility for netting of payment and securities delivery. What is it? Is it a primary dealers? Is it a depositories? Is it a CAIIB? Is it a stock exchange? Dash provide clearinghouse facility for netting of payments and securities delivery. A, B, C or D. It will be done by primary dealers, it will be done by depositories, CAIIB or stock exchange. Policy repo rate is 4.4%. When a policy repo rate is 4.4%. Everyone is going with C option, that is CAIIB. Confirm CAIIB. CAIIB is the regulatory body of the capital market. CAIIB is the regulatory body of the capital market. We are talking about it provides clearinghouse facility for netting of payment and security delivery. No, it's not CAIIB, it is a stock exchange. A stock exchange, BSE, NSE provides us the clearinghouse facility for netting of the payment and security deposit, not C. The right answer will be D, that is a stock exchange. CAIIB is the regulatory body. The selling and purchasing of security take place on a platform that is provided by stock exchange, that is BSE and NSE. So the right answer will be your D option, that is a stock exchange, not a CAIIB. Clear? NACH is a facility provided by NPCI, National Automated Clearing House, in which the bulk transactions will be maintained, will be done online. Okay, for example, let's say, for example, a bank has to give salary to its all the employees, or a government has to transfer the pension amount, or the government has to transfer the compensation amount to the farmers or any other category of the country. In that situation, when we have to transfer bulk amount, we have to transfer the bulky transactions, we have to do the bulky transaction, then we use the facility which is provided by NPCI and known as NACH, National Automated Clearing House. Okay, for bulk transactions, for bulk payment transaction, we use NACH, Uma. So right answer will be D, that is a stock exchange. A stock exchange provides the clearinghouse facility for netting of the payments and securities delivery to the parties. Next is, fourth question is asking about that risk management system comprises which of the following? Risk management system comprises which of the following? First is saying risk management strategy and policies as well as procedures for risk identification and measurement. Second is saying appropriate internal organization. Third is saying effective and efficient risk management process covering all risk in the bank is exposed to or maybe potentially be exposed to in its operation. So which of the following is risk management system comprises? A, B, C or D? And after giving the answer, also let me know what type of risk can arise in a bank, or what type of risk a bank is exposed to or potentially exposed to. A, B, C or D? Uma Singh B, Vivek Singh B all, Priyanka Singh B, Gitanjali Singh C, Murli Singh C, Manjula Singh 4, that is AB, okay. Gagan is saying third. Ashok is also saying third, yani ki C. Suchi is saying C, Ajay is saying 4, Devashish is saying C. So everyone is saying the answer is third. Maximum are going with third option. That is true. A, B, C, all are correct. We are talking about the risk management system. What risk management system will comprise? It will comprise a certain strategy or policies as well as the procedure which will help to identify the risk and to measure the risk. Okay, right answer will be your C. So when we are talking about risk management, what is risk management? Risk management is a certain form of or certain policies or strategies or the procedure we are using to identify the risk and to measure the risk, like how to eradicate that risk or how to eliminate that risk. So to know the policies and strategies is your risk management. Second is saying appropriate internal organizations is required to make certain strategies or policies, so that you are mainly focusing on the risk management techniques. After that, effective and efficient management process covering all types of risk which can be exposed to the bank or potentially can be exposed to the bank. So we have to be maintain a certain kind of risk management procedure or process or a strategy or techniques in which we are capable of managing all types of risk which are exposed to the bank. So right answer will be C. It means third option, that is A, B, C, all are correct. Okay. Now let me know what types of risk are exposed to the bank. What are the different types of risk which can be exposed to the bank? Types of risk. What are the types of risk which are exposed to a bank? Let me know. Now those candidates who are live in the session 1, do like session once. Like the sessions immediately. And let me know what are the types of risk exposed in a bank. There are multiple types of risk. Credit risk, very good. Operational risk, interest rate risk, very good, Gitanjali. What about the other risk? Operational market, okay, Sharad. Market, credit, operational, liquidity, very good, Devashish. Credit, operational, market, very good, Harpreet. After except these risks, we have covered the credit, operational, market, operational risk and liquidity risk. What are the other risks also there? Okay, everyone giving the same answer. Operational, marketed and credit and liquidity and interest rate risk. Okay. So first of all, if we are talking about the risk is nothing, simply the uncertain occurrence of a loss in the business is known as risk. Okay, when a uncertain loss happens in a bank or in a financial institution or in a business is known as risk. Now, what are the different type of risk bank is exposed to? First is our credit risk, second is market risk, third is interest rate risk, fourth is your liquidity risk, fifth is your operational risk, sixth is your business risk, seventh is your what we can say reputational risk, eighth is your strategic risk, ninth is your systemic risk, 10th is your forex risk. So these are the types of risk which we can face or the bank can face in a particular performing a functions of itself. Okay, so these are the 10 to 11 types of risk which can occur or which can expose to a bank while a bank is performing its function. Clear? Now the liquidity risk is also of 3 types: the funding risk, the time risk, the call risk. Liquidity risk is also divided into 3 types. Okay, now let's move forward to the 5th question. Leasing, hire purchase and bill discounting are domain of leasing, hire purchase and bill discounting are domain of first NBFC, second commercial banks, third mutual fund, or fourth is saying none of the above. So which of the following is right related to the leasing hire purchase bill discounting domain? Achha, if we are talking about leasing, leasing in simply means when you are giving your asset on a rent. Okay, so leasing means giving asset on a rent for a specified period of time, that is known as your leasing. Okay, you are giving the permission to use your asset to some other person for a particular period of time, that is known as leasing. When we are talking about hire purchase is the facility in which you purchase a certain commodity by paying a certain payment or down payment, we can say, and after that you are paying the rest amount of that particular commodity in an installment, that is known as hire purchase. When you pay a certain down payment, you are hiring the project, you are hiring the commodity or product. You have not given the possession of the product, you have not given the ownership of the product, because you have not paid the whole amount of the product. So first, when you pay the down payment, you are hiring the product, that is hire, and when you completed all the installments, then you will purchase the product, and after paying all the installment, you will get the possession of the product or the ownership of the product, that is hire purchase. Discounting of bills is simple. When you have a certain invoice or when you have a bill whose payment is going to be in the future date and you required a immediate cash, you required a immediate payment, then you go to the bank and you make sure that the bank will be allow you to discount the bill, and bank will provide you certain immediate cash and will collect the money from the buyer on a maturity date or on the specified date. That is bill discounting. Okay, so these are the domain of everyone. Maximum are going with the A option, that is NBFC. That is true. Right answer is NBFC. Now NBFC is a non-banking financial company which provides loan and advances in a specified sector in investment, like in the liquidity, in the share market, bonds market, debentures market. It provides loan for a particular business also, but not in the agricultural activities. NBFCs do not provide loan to the institutions whose principal business is related to the agriculture industry. Apart from that, NBFC provide loan and advances to every sector. Okay, so right answer will be NBFC. Achha, what is NBFC? If we are talking about India, or if we are talking about any other country, the financial institutions are divided into two parts. First is banking institution and second is non-banking financial institution. Now NBFC is a part of which of the institutions? NBFC is a part of banking institution or NBFC is a part of non-banking financial institution? Let me know. NBFC part of which of the following institution? Banking or NBFI? NBFI stands for non-banking financial institution. So NBFC is a part of banking institution or non-banking financial institution? Very good. Everyone is saying non-banking financial institution. Non-banking financial institution cover your all India financial institutions. It cover your NBFCs. It cover your primary dealers. Okay, and in banking institution, all the banks will come, which is divided by Reserve Bank of India. So all the categories of bank will come under the banking institution, and non-banking financial institution covers all India financial institution, NBFCs and primary dealers. Okay. Now, but NBFCs have to register with the Reserve Bank of India. If the questions ask that who supervises or who regulates NBFCs in the India, the right answer will be RBI. RBI regulates the or supervises the non-banking financial companies in India. Okay, but it is a part of non-banking financial institutions in India. Okay, very good. Now, before moving to the next question, those candidates who are live in the session, do like the session once. Okay. Now, next. When a bank offers all types of financial products like the banking products, insurance products, mutual funds products, share broking, commodity broking, investment products, etc., all under one roof, it is known as. So when bank is providing all types of services, all types of activities under a one roof, it is a type of which type of banking? Para, virtual, universal or narrow? Which type of banking is it? So everyone is going with the C option. That is narrow banking. Okay. Everyone is going with the C option. Okay. So right answer will be your, sorry, that is universal banking. Right answer will be your C, universal banking. So universal banking is a type of banking in which a bank is providing all types of activities, all types of financial products under a single roof. Okay, if I am going to a bank, I can deposit my money, I can withdraw my money, I can take loan from the bank, I can have a locker facility, I can invest in the insurance sector, I can invest in the share market also, I can open a demat account, I can open a trading account, I can have an international debit card, credit card services, I can have every kind of service whatever I want from a bank or from the bank. Okay, so that is known as universal banking, when under a one roof bank is providing all kinds of activities to you. Okay, now what is virtual banking? Virtual banking simply means when without visiting a bank branch, a customer is capable of carrying on the banking products or banking services is known as virtual banking. It means if I want to deposit the money, if I want to withdraw the money, if I want to take a loan, if I want to invest, or if I want to transfer fund from one account to another account, I do not have to visit the bank branch. I can do that without visiting a bank branch. So when a person is carrying on the banking services without visiting his bank branch is known as virtual banking. For example, the mobile banking, for example, the internet banking, for example, your ATMs also. So these are the types which is covered under the virtual banking. If we are talking about para banking, what is the difference between para banking and universal banking? Let me know what is the difference between para banking and universal banking. First of all, para banking is the type of banking in which bank is providing extra facility other than its day-to-day transaction, transactions. So when a bank is providing extra activity other than its day-to-day transaction will be known as para banking. Now, what is the meaning of para bank? What is the difference between para banking and universal banking? In universal banking, bank is also providing the extra activities or extra facilities apart from its day-to-day transaction. Same is happening in the para banking. So what is the difference between these two? Let me know. And if you don't know the difference, then let me know again that we do not know, so that we will discuss and move forward. So in para banking, bank is providing extra facility other than its day-to-day transaction. That is known as para banking. Achha, let's take, you are answering till now, just take a narrow banking. What is narrow banking? When a bank plays its fund only in risk-free assets. Only in risk-free assets. It is known as narrow banking. It is known as narrow banking. Okay, like a payment banks are doing. Payment bank can't provide loan to the public. They can only invest in the risk-free assets, and that is known as narrow banking. When a bank is placing its fund only in risk-free assets, that is known as narrow banking. Yes, in narrow banking, bank is providing a limited facility and investing a fund in a certain risk-free assets only. Don't know. Okay, everyone is saying don't know. Let's say first of all, in universal banking, we have studied here all types of financial products. Okay, focus on the keywords. In universal banking, we are seeing all kinds of financial products. But in para banking, we are seeing extra facility. It can be one or it can be two extra facility. But when we are talking about all the extra facilities, when we are talking about all the benefits of financial products or services, then it will be known as universal banking. So what is the difference between universal and para banking? In universal banking, under a one roof, we will get all kinds of services. That is your universal banking. But in para banking, you will get certain extra facilities, not all, but one or two extra facilities you are getting here other than the day-to-day transaction. That is known as para banking. Now clear the difference between para and universal. Let me know. Not only, you can't say only insurance business bank is providing. Bank can provide any one or two extra facilities in the para banking. It can be insurance, it can be share broking, it can be international debit, credit card, anything else. Okay, but not all are limited. One or two or three facilities will be provided other than the day-to-day transaction. So this is the difference between universal and para banking. Let me know by typing yes or okay or continue, so that I will continue the session. Clear to all the difference between para and universal? So the answer of this question will be universal banking. Under a one roof, we are getting all kinds of financial products. Okay, yes. Now next is seventh question, that is a negotiable certificate issued by a non-Indian company representing a number of shares in a foreign stock that is traded on an Indian exchange is known as. Yeah, you can say that providing an insurance product, that is example of parabanking, but it is also example of universal banking when you're providing all kinds of services. Okay, so in extra services, we can say insurance business, we can say share broking, we can say your international debit credit card facility. That is true. Correct, Murli. Now, what will be the answer of the question number 7? GDR, ADR, P notes, and the D option is IDR. So, which of the following is true? Read the basic, or we can say the key notes or key points of the question. What is the question is saying? That the certificate is issued by a non-Indian company representing a number of shares in a foreign stock that is traded on Indian exchange. But how it can be the GDR? How it is possible that it is GDR? What is GDR? GDR is the Global Depository Receipt. When an Indian company, let's discuss here one second. When we are talking about an Indian company, when an Indian company wants to issue share, this Indian company go to the SEBI, that is the regulatory body of the investment market, and then this company will register in the stock exchange. Okay, after going to the SEBI, it will be registered in the stock exchange, and after registering, this company can issue the shares in the market. And when this company issuing shares for the first time, it is known as IPO. When the company is issuing share for second and more times, it will be known as your FPO, that is follow on or further public offering, but in the Indian stock exchange, but in the Indian market. Okay, so when an Indian company is issuing its shares in Indian market, first time it is IPO, second or more times it is FPO. When an Indian company wants to issue its shares in global market, Indian company wants to issue its shares in global market, it will be known as GDR, except America, okay. Or when an Indian company wants to issue its shares in America, then it will issue ADR. So it can't be GDR, it can't be ADR, because Indian company is issuing shares here in the foreign stock exchange. Or what we are asking in the question, that a non-Indian company is issuing its shares in the Indian stock exchange. Okay, very good. Now everyone is going with the D option, that is IDR. That is correct, Indian Depository Receipt. Okay, right answer will be your Indian Depository Receipt, that is IDR. The right answer is IDR, Indian Depository Receipt. Now, what is Indian Depository Receipt? Let me write here. When a non-Indian company, wants to issue its shares in Indian market, in Indian stock exchange, then it will be known as your IDR. Okay, Indian Depository Receipt. So right answer will be your D, that is IDR. Very good. Next, which of the following duration is correct for interbank term money borrowing among banks? Is it 1 day? Is it 2 to 14 days? It is more than 15 days, or none of the above? Answer of 8th question, A, B, C or D? Let me know what will be the answer of the question number 8. Do mention the question number also. Whenever you are answering a question, do mention the question number. Gitanjali is saying C, Devashish is saying C, Harpreet is saying B, Suchi is saying C, Ajay is saying C, Prajakta is saying C. Read the options very carefully. Read the options very carefully. Sharat is saying C, Murli is saying B, Sindhu is saying A, Nisha is saying C, SK is saying C, Simmi saying B, Priyanka saying A. None of you has given the right answer till now. The right answer will be your none of the above. D will be correct option. Not more than 15 days, more than 14 days duration of term money. 15 to 364 days is a duration for the term money. What is written here? More than 50 days. Not more than 15 days. More than 14 days will be the right answer. So option will be here, none of the above. That's why I was saying read the options carefully. Right answer will be your D option. None of the above, because the duration for term money is from 15 to 364 days. So right option should be ya to 15 to 364 days or more than 14 days. Okay. So right option is D. So you all know the concept, you all know the answer, but make sure you are reading the options carefully, you are reading the questions carefully. Okay. Now, because this is a question where you should not do the wrong answer. Now next, merchant bankers are financial brokers, financial intermediaries, underwriters, or none of the above. Merchant bankers are financial brokers, financial intermediaries, underwriters, or none of the above. Ninth is Devashish is saying C, underwriters. Okay. What about rest? B and C, two options are coming. First of all, when we are talking about merchant banking is a professional service which is provided by the merchant banks to their customers, considering their financial needs for educate, considering form of the fee. So they are taking a certain fee and they are providing you the financial services. So we can simply say, what is merchant bank? Merchant bank refers to a financial institutions, okay, that conducts the underwriting, loan services, financial advising, fundraising services for the large corporations and high net worth individuals. But when we are talking about that, what they are, so they are the financial intermediaries who are providing you certain financial services related to what they are doing. They are conducting the underwriting, they are conducting the loan services, they are providing the financial advice, they are helping you to raise your fund services, okay, for the large corporation and high net worth individuals. So right answer will be financial intermediaries. They are the financial intermediaries who are providing you these certain services. Okay, so right answer will be B, not C. Next, liquidity with the banker means, liquidity with the banker means cash management with RBI, the level of convertible short-term assets available with the bank, or bank balance, or none of the above. So what does this liquidity means? What will be the answer? A, B, C, or D? B. Everyone is going with B option. B is saying the level of convertible short-term assets available with bank. Okay. Okay, everyone is going with B option. That is true. The level of convertible short-term assets which are available with the bank. Short-term asset, because these are easily these can be easily convertible to cash. That's why it is known as liquidity with the banker. Okay, so whenever we are talking about short-term financial assets, these are the assets which can be easily converted into cash, and that is known as liquidity with the banker. Right answer will be your B option, not A. Why A? Cash maintained with RBI, it is CRR, cash reserve ratio. It is not the bank. It is not, this amount is not with the banker. This amount is with the RBI. So when we are saying cash maintained with the RBI, it is your CRR, cash reserve ratio, and it is not with the banker. It is banker is maintaining with the Reserve Bank of India. Bank is maintaining with Reserve Bank of India. So right answer will be your B. Okay. Now let me know, out of 10 questions, how much you have given the right answer. Gitanjali got 8. Very good, Gitanjali. That's a good score. So information for all of you that the JAIIB course or video course is available on Adda 24/7 application. One is bilingual batch and another is English medium batch. You will get the video courses here on the Adda 24/7 application for your June-July exam 2022. Now enroll in this particular batch, you have to use a code that is Y496. If you use this code on Adda 24/7 application, you will get 78% discount on the application. And the another thing is, there is also available the test pack for the CAIIB and the JAIIB. In CAIIB, you will get 1500 questions, and in JAIIB, you will get 50 plus mock tests. As we know, we are reading the concept, we are understanding the concepts, but the implementation of the concepts are very important. If we are not able to implement the concepts in the question, there is no use. So to enroll in this particular batch or this particular test pack, you have to use a code Y496, or you have to add the S at the end. After applying this code, you will get 18% discount on these test packs. Okay. And if you are also going to prepare for CAIIB exam and you are going to give the JAIIB exam also, then Mahapack will be a good option for you, because in this you will get mock test also, you will get your ebooks also, you will get all the live sessions also for a particular period of time. Okay, you do not have to purchase individually. Like you are purchasing JAIIB batch, then you are purchasing a mock test, then you are purchasing a ebooks. You do not have to go for an individual product. You have to mainly only follow or purchase a single particular product in which you will get everything. So the prices are little high here, which you can see, but after using the code Y496, you will get 78% discount on Adda 24/7 application. Okay. Srinivas got 6, Vivek got 8, Prajakta got 7, Rahul got 4 out of 6. Okay, Vinay got 7, Suchi got 8, Sharad got 7, Murli got 5 out of 8. Okay, so highest is 8 till now. That is of Suchi and Gitanjali. Very good. So this is all for today. So those candidates who are new to the channel, do subscribe the channel and press the bell icon so that notifications related to the upcoming session will be given to you. And also do like this session, and if you have any doubt related to particular session or any topic, you can ask in the comment section. I will check the comment section and reply your query. Okay. So thank you all for joining, and stay safe.